Hi, this is Mark McRae, and thanks for joining me. In today's lesson, I will be going over pivot points. Pivot points are extremely popular with many traders for different markets. And one of the reasons they are so popular is that they are simple to use and can be very effective. In these examples, I will be using charts of the Dow Jones. So a pivot point is simply the average of the high, low and close of the previous day's trading. So in this example, this is a daily chart of the Dow Jones. Now in this particular software, it does calculate the pivot point for you, but I realize not everyone has access to this type of chart, so you can download a free pivot calculator from the lesson below. It's also a good idea to read through the lesson below, as it will give you some nice background information on pivot points. So here, this is a little data box. Wherever I place my mouse, it tells me the open, high, low and close of that particular bar. So on trading day, Friday the 22nd, we would use the information from Thursday the 21st. So here I can see that the high is 10,700. So we simply input 10,700. The low is 10,608. We'll plug in 10,608. And the close is 10,627. 10,627. Calculate. And this will calculate the pivot point, and from the pivot point and the high, low and close, it will also calculate first, second and third resistance and first, second and third support. These are areas that we are very interested in as traders, as they tend to be areas where we have an opportunity to trade. To see this in action, let's have a look at the 5-minute chart. And on this chart, the pivot point is displayed as a black line. First resistance is blue, second resistance is red. Below the pivot point, first support is blue, second support is red. Now, as the name implies, the pivot point, as the market passes through a pivot point, the market sentiment has changed. So in other words, if the market is below the pivot point, the market tends to be bearish. And if the market is above the pivot point, then the market tends to be bullish. As it approaches the various resistance and support areas, it gives us an opportunity to trade. Now, dropping down to a 1-minute chart, we can see here that this was the first support area. There was a nice little downtrend, and the market came down, formed support, came back up again to form resistance here, came back down, retested support, and there wasn't enough momentum in the market to take out the support area here. That's the first clue that the market may be turning. When it doesn't have enough force to take out the previous support area, then something else may be happening in the market. We can see then that the market broke the trend line, then took out the previous resistance area here. Now, as it takes out the previous resistance area, it's an opportunity to trade. We could enter the market here on the break and place our first stop loss here, just below the first area of support, or the most recent area of support rather. And as the market comes up, breaks out, forms resistance, pulls back, and then exceeds the previous area of resistance here, we can move our stop. We move our stop to the most recent support area at this point here. We can repeat this process. As the market moves up, it forms resistance, pulls back, takes out the previous resistance. We can then move our stop loss to this point here and lock in profits. Same thing happens, takes out resistance, comes back, forms support, takes out resistance again, and then we can move our stop loss to this point here. Now, here the market would take you out. Because of the fact that by this time you know that you have some profits, you could, at this point here, you can see that the market forms resistance, comes down, moves up here, forms new resistance, but it doesn't have enough force to take out the previous resistance here. So you could move your stop to this point here as it fails to take out this resistance, but most probably you would be taken out to this point here. Now, an interesting thing about pivot points is once it bounces off a support or resistance area, it tends to move to the next most logical place. So if it bounces off first support, the next most logical place for it to go to is the pivot point itself, which is way up here. Now at this point here, you're out the market. To get back into the market, you can just repeat the process. As the market breaks out previous resistance area here, allow the market to take you in, and repeat the process. As it forms resistance, move your stop to here, resistance, move your stop to here, and this would be your target area here, the actual pivot line here. Now this is the basics of trading pivot points, and in the next video I'm going to show you much more accurate ways to identify good trading opportunities around support and resistance and pivot point levels. The next part of this lesson is available only inside the Trader's Secret Library. The advanced pivot point techniques, along with some of the most advanced trading techniques you will find anywhere on the internet or anywhere else for that matter, are available as a member of the Trader's Secret Library. This page will automatically redirect you to the Trader's Secret Library website where you can join up and become a member. Alternatively, you can click the link below this lesson. I look forward to seeing you in the next lesson, and thank you for joining me.